Hello, and welcome to February 3rd edition of the Portfolio Update. This is actually the end of the day. The reason I'm doing this on Thursday is because Friday I'm taking off and I won't be back till Sunday. So there won't be an upload on Saturday. We will do one today, and then I'll catch up with you sometime during the week, maybe at the end of the week, to continue with that. But this update comes a little bit early, and let's get started. First things first, back to the portfolio manager. We are up almost 4% since January 12th. In comparison, the S&P 500 has lost 5.26% since the same time. I've been tracking the change since February 12th, so since February 13th, this has started updating. And yeah, my alpha here looks like it's about 8% in a couple of weeks. So that's pretty good. One new addition to the portfolio, which is these guys right here, and I'll get through those. As you notice, this bottom section here is populated. It now, like the number 19 and 20, actually represents four simultaneous trades: a long call, a short call, and a long put and a short put. These are the profits for those. Uh, this is the P&L percentage wise. Looking for 300 in order to close this. I'm looking for a 3-to-1 return. If it gets better, that's good. If it's minus 100, that means I lose all my premium for that option. So far, so good. These are only 6 days old, and currently my first and only option I have on right now, which consists of four different trades, is worth about $340. Okay, and that's the new thing. What else have I done? I've dropped Lululemon during the week. This was a couple of days ago. Um, the fundamentals are showing that the leather and apparel industry is going to be outperforming the rest of the market, and so that short does not align with my current fundamental views. So as much as that price has been going down and I took a little ride, it started retreating on me. So I had closed it and turned it into a mediocre $7 profit. However, the negative 130 something last week Abbott has bottomed out as expected, and its fundamentals are strongly pushing it up. As you'll remember, I took on Abbott option. I really like the company. I've gone through their fundamentals and the news, and I was quite impressed. So decided to purchase that. And then I needed a short for it, so I've purchased a put on and sold a put on these guys here. And we'll get to that right at the end. First, let's go through what's been happening. So volatility index, once again, above 25. Good opportunities for daytime traders. Lots of volatility in the market right now. Ideally, you don't want to be 100% exposed in a scenario like this. You want to give up some space or give up some cash for opportunity trades, which are all over the place whenever the VIX spikes. So that's just a small FYI. This is our S&P 500. Today's change is minus 2.44%. I've managed to scrape up zero point 0.6 on the positive side. It's been negative. It's been very choppy this whole month. But today I had a big crash, and there was that Facebook thing, 26% loss. Google, or was it not Google? No, Amazon.com. After hours, aftermarket hours reported like 700% better earnings per share or something. So expect that to jump first thing in the morning tomorrow, meaning Friday morning. It will open up higher. And that's just what my little prediction says. Now, I'm not always correct. I have been wrong about the GDP. It did record higher or report higher. I was expecting something lower, but it seems that we're pushing. So there's no indication here that the downward slide of the S&P or all the other stock markets is going to be downward in any immediate future. Not until March, I would say. I see this as a recovery and going up from here. GDP is up. PMI, as much as it's slowing down, marketing, sorry, the manufacturing sector is still growing, slower, but it's still growing, technically speaking. So we shouldn't have too many issues. The housing market, there's been a lot of talk in the news about the market and that it's tanking. Well, not according to my numbers. According to my numbers, it's actually doing pretty well. So I don't see any problem with the financial system there. Here's the 10-year yield. Here's my yield, and it's actually steepening. You notice I've done a little bit something different here. Each one of these reports is going to be colored in as a different line now, so we'll actually have a representation of whether it's going up or it's going down. You'll actually see the history, one on top of the other, which should look pretty cool, like a rainbow. Here's the USD Canadian. Not much movement, it's just floating. That's why you don't solely trade Forex and currencies, because it just makes no sense. Here's our gold, silver, here's copper. Lots of sideways action, just like everything else. And one and only that keeps climbing is oil. And voila, we're at $90.11. Okay, back to some of my trades. Accenture, Zoom Communications. You'll remember from last week that I believe this was a very small profit, and Accenture is still down, but as you can see, there has been a little bounce back. This is mostly S&P 500 driven. Accenture, as part of that market, will go down with the market, and so does everything else. The problem, the opportunity is within the ratio. One moves down then more than the other. And as long as that ratio keeps growing, as you'll notice, we're sitting here at $80. The only thing is, this is not an option trade. This is equities. This is a cash trade. And yeah, I'm still scraping out 10%, even though Accenture is losing 14% at this time, scraping up on negative 112. My short, Zoom Communications, it's actually at $200. So $80 in the profit. I'm going to follow this one just for a little bit longer. It would be a shame to give up on this now. I kind of want to give up the room and take some day trades, but I'm not going to. I'll hold on to this one because it's recovering nicely, and today's change in the ratio is over 3%, which is great. Cushman, Wakefield, and Itron. Once again, nice growth. We're almost at 15% now. Today's ratio is 2.68. As you notice today, both of these companies went down, but the weaker company tends to fall faster than a stronger company, and that's exactly the case here. The ratio keeps climbing. It's a very nice slope. I love it. Nothing to change here. Continue on. Enviva CRISPR. This is basic materials and lumber versus healthcare. So long lumber. And here I'm going to start... I'm going to close this one. Close this one tomorrow, especially EVA. The reason being, and what I'll do is I'll pair up the CRISPR with Abbott. I want to get rid of EVA. They are basic materials, lumber and wood productions. They're directly and tied up to paper. And as such, I know that industry is actually not doing all that well right now. I'm going to close that down and take a little loss on it. Actually, it's minus $30, but it's overall it's plus 82.96, and so even though I'm going to take that, it's not going to change my point loss. Point loss is already there. What's realized, it's realized. I'm just going to close this and continue with the winners. I don't want to hold on to the losers for too long, and I know it's not minus 10%. I could be regretting this, but fundamentally speaking, this no longer works for me, so I'm going to be getting rid of that, I believe. But even though that ratio just looks amazing, it's hard. It's been 49 days and I'm almost at 30. I'm almost at, the closure for this. Maybe we'll leave it open. We'll see. We'll see. I mean, the only thing that's keeping me going with this is really my ratio is so nice, and having the one up and one down, it's just a point of hedging and making sure that if there's a major spike in the market, I don't get hurt. The market spikes, market rallies, market drops. I shouldn't be seeing any of that. I should be seeing small ups and downs every day, overall up. And that's what I'm after. I'm after these small percentages day to day, day in, day out. And overall, at the end, you come out stronger than the market itself because the market rallies and the market crashes, and then it takes time to get back up to where it was before. I'm looking not to have those big roller coaster rides. I want to go up and down a little, but overall up. Which, let's actually quickly go back to our profit portfolio. Remember that drawdown that I had at the beginning of starting this? That's that right here. This was me trading equities only, cash trades. It's a slow up, and then I got into some options. So first there was a little slowdown, and then we have boom. Options are 100 to 1 leverage. Okay. The only thing with options is that the risk on the option is limited to the price of the option. So I'm actually spending less on the option than I would on both of these options than I would on one of these, which are stocks, just outright stocks. Buying and selling outright stocks, you're putting up a lot more collateral, whereas you get a lot more bang for the buck with the options because they're cheaper, depending on what price you get them at. But like I got this one here for $180.60, and it's already making 66.90. If I had it's 37% growth right off the bat. But the other one here, the 273.40, which is the long and short Abbott actually. And once again, I do this long and short to save my time decay or to prevent time decay on these options, because any option that you take has time decay on it. The closer you get to the expiry date, then less and less and less it's going to be worth, meaning that this initial investment is going to dwindle. Now, what happens when you sell an option to somebody? Well, every day time decay works in reverse, and it works for you in this case, meaning that the longer I wait, the more these shorts are going to be, or sorry, the closer the strike to my sell target, the more it's going to be worth. Okay, and it's going to be worth more as a result of the time decay working in my favor as opposed to against me when I buy something. And so it takes out the negative of owning an option, and that's pretty much all it's for. It's just to take out the time decay. One is losing value, the other one is gaining value. And unless you watch this live, you won't know what I'm talking about. But stick around, subscribe to the channel. I have some really cool information here to share. This is how the hedge funds do this stuff. If you stick around, you'll see how relatively easy all this stuff is. Right now, it just looks like a bunch of numbers, doesn't make any sense. But go to that playlist that's up there. You watch every single video from the beginning. If you miss something, go back and watch it again. It's free, okay? I'm not charging you any money for it. I'm just sharing. I have a little bit of time to share, and I'm sharing this information because this stuff works. My life has changed ever since I started doing it this way, and all I see is this grows all the time now. My equity keeps going up as opposed to crashing because I'm over leveraged in something, or I don't hedge enough. I use hedging all the time now. And moving forward, I will pretty much almost never have a naked trade on like this one. Why is it there? I took out Lulu and I just haven't found a replacement, but this will fill in very shortly. You always want to have every single trade covered. Okay? And so that's Enviva CRISPR. We've been through this one. Nice growth, 23%. Abbott. This is the naked long that I have on. This is the stock position. It's currently losing 32 bucks. That's a recovery of about $100. This was down last week, but I'm expecting good things. This company's great. I love it. and it's gonna go up. Invitation Homes, which is real estate, against consumer cyclical Rivian Automotive. Once again, I have one which hasn't done much. It's gone down a lot with the S&P, which is here. The Invitation Homes has suffered when the S&P has suffered, and so has the other one, which is Rivian. But fundamentally speaking, Invitation Homes is set to go, and this looks like a nice double bottom here already. Even though this does look like a Head and Shoulders, but you'll see there's a recovery. A Head and Shoulders in a company like this, for a company that has bad fundamentals, is a good entry strategy. But as a good entry strategy for something that has good fundamentals, you want the Head and Shoulders to be upside down. I don't see this going down, so I'm basing my decisions on that, and I'm expecting Invitation Homes to go up further from here and recover with the market. Currently, we're just experiencing a short correction is what it's pointing to. There are no indicators in the market right now or in the economy that it's going to crash anytime soon. Yeah, that's about that. There will be one coming, but nobody knows when. And the only way to stop worrying about that is to hedge yourself properly, fully. And then if the market crash does come, we'll probably end up losing very little or end up scraping up some profit. Just like today. I mean, S&P 500 goes down 2.5% and I make 0.64. How does that happen? It happens when you hedge. I would have lost this much, if not more, in my account, depending on what my choices were if I was just long. So I'm long and short always on everything. Bergwarner and Beyond Meat. Another one that's starting to finally work out. It's been around for 8 days now. The Bergwarner lost 1%, but Beyond Meat, as anticipated with the shitty product that they have, they are tanking, and I'm, making some profit from that. Currently, it's $32. Once again, cash trade. This is stock position. And which brings us to our last contestant, the Abbott and Schweitzer Maudit International. Remember when I talked about Enviva Partners and how I'm going to drop that one because paper is due to underperform? It's actually the only part of the economy right now, or part of the manufacturing economy, that's shrinking right now. Everything else is growing except for basic materials, paper and paper products. And so I've gone through this company. I've looked at their data. I've looked at their financials. There were some things which I was not too happy with. And you see, you can go to investor relations on any one of these companies. Any public company has to publish this information. And if you go to news, show you one thing over here. ESG report. Like, there isn't really much. Let's look at 2021. December, November, October. Announces third quarter results. Close of sales spotwood. There's not much communication from this company. It's usually like one a month. That's not enough. That's one thing. Another thing worth mentioning is that if we looked at the good old macro trends and SWM, when we look at their income statement here, their EBITDA, I don't know, it's not coming or going anywhere. Okay, it's pretty much staying flat. The only reason I'm really shorting them is because they're part of the economy, or their sectors due to underperform, and that's more forward looking than their last numbers. That's looking into the future. And so I'm betting that this paper company is going down with the fundamentals. And that's that, as cruel as it may be. So far, my long and short Abbott, it's $273, and my short in the Schweitzer Maudit International is worth $67. Nice ratio. I've picked the bottom, I think, here. I'm pretty impressed with the entry on this one. The short is only a couple of days old, and then the Abbott is 4 days old, and it's, I bought that on Thursday of last week, I believe. And yeah, that's the short update here. I mean, also, I've redesigned this here. What this represents is the option strategies, and which I'll be using a lot more of. I had this, if you go back to here, you'll notice it was a completely different scenario. The reason I've added so many windows here is that in the future, if I have a trade which is working out quite nicely and I want to add on to it, I need to be able to track those extra separate trades. And so we're going to enter them in tiers. There'll be the original trade, then there'll be tier 2, like second wave, and then there'll be tier 3. Don't worry about how wide and how narrow these are. That just comes with the rest of the data. It just keeps on getting manipulated, but you can always make these bigger and whatnot. But if I were to update my Abbott and Schwer mod it, if I want to go and see how much is this option worth, where does this data come from? Well, I provide myself with links. And so I'm looking for the Abbott long, and that's here, Abbott. If I open this up, this brings me to the Yahoo Finance, and this gives me the price of this option, which is March 18, 2022, 125 call. And what you'll notice here is that this gives you the last price, 744. This is the last price something sold in the market. But if you go to, and they're giving you this for a price, and a lot of the brokers will use this to update your equities at the end of the day, which causes havoc because these things change in price all the time, and your broker is going to be showing you bogus numbers, as I used to call them. They're not bogus numbers, they're just based on the last, or sometimes they bait it on the mid. What I like to do is I like to look at the number between a bid and ask and bid the median, because that is your best chance as actually getting filled in on an order. So if I were to go in and try to purchase this at 7:30, I'd probably never get a fill in. I'd probably never get filled on that. And if I wanted to buy this, what I had to do, I would have to actually find the median price. Okay, and the way I do that is I have a price here of 7:30 and 7:45. So I'll show you what I do with that. I come back to my sheet, and then I put this in here, 7:30 and 7:45. And what this will give me is the median price. The median price, once again, is the most likely to get filled in to get that option on, or to get this filled in. Okay, so we're looking at 7.375, and that is where that is right here. So 7.375. Let's just quickly update that. 375, and that is updated now. As you'll notice, 345.30 is actually my profit's gone up a little bit as a result, which is great. I love it. 792.97. And that's obviously thanks to the after-hour manipulation. As you all know, when the market closes at 4 o'clock, or Eastern Standard Time, obviously, where I'm at, sorry, for others it's going to be different times, but figure out your time zones. When the market closes, the retail traders, like myself and a bunch of other people out there, they will not be able to trade anymore. You're cut off. But market makers, hedge funds, and all these different big banks, they're allowed to trade for another hour. And that's why you'll notice that I've updated this data, yet I just gained another $5. How did that happen? Well, the price of Abbott has moved after hours, and so that number readjusted. Okay, and then it stops moving at 5 o'clock, and at that point in time, all the earnings are reported and all that different stuff. So what's happening is that earnings get reported right after the market closes. You can't do anything about it, but now all these big boys have a chance to shuffle around their positions and get ready for the big opening in the morning. Look out for this one. I'm talking about Amazon.com. Look at Amazon stock on Friday morning. What's going to happen? Well, they just outdone their earnings per share. It's gone through the roof. What do you think is going to happen to them? It's going to rally first thing in the morning, but it's not going to be a rally which you can catch. It's going to be an open a lot higher. That's what I predict for tomorrow. Don't take my word for it, but I'll get back to you and I'll actually go through this again and we'll play you this part of the video this time just to prove my point. So that's it. Yeah, the master template has changed with everything else. I'll be spending a lot more time in the options strategies from now on. It is more profitable. It just needs to be timed properly. So technicals come in, and I picked the bottom on Abbott because I know it's a company that's going to bounce. It's going to go up. It hit a pretty low because of the S&P, but then the S&P found the trough. And so it just bounced right from there. And so, yeah, good trade. Good trade so far. We like positive results that come right away. It just makes me smile, right? But anywho, what is the total return for since January 12th? We're at $623.89. That is, let's just write that down so I can make a nice thumbnail for you. 623.89 is the profit for last 2 weeks. Great. With this, I'd like to end. Thank you very much for sticking by. If you haven't subscribed to the channel, please make sure you do so. Click that bell right next to it. This will keep you updated on everything that's coming. And there are some nice lessons coming up. So far, I've been sharing with you only how I do these things, how I keep track of it, what do I do with that. But pretty soon, we'll start getting into some in detail lessons on exactly how to do this stuff. Maybe how we'll go about it. I'll show you a little bit on how to set up these spreadsheets for yourself, how to start using Excel for it to be your friend, and so you can outperform the market. My outperformance is right now, it's around 8% anyway. It's 526. It's actually about 9%. I'm about 9% alpha. That makes me feel pretty darn good. And that is since January 12th. That's the difference. I'm done better by 9% than the market, which is exactly what I said. The market went down 10%. Yes, it regained some. But in that time, I've just gone up. I've had some negative days, but as you'll notice, yes, some of these are bigger, but most of them are small. And the only reason my portfolio change was 2.5% yesterday is because one of my options, the Abbott, had a really good rally, and that's where that happened. Okay, so currently we're at 18,732. According to my broker, this number will go up and down. Like I said, their prices and their actual equity, you cannot rely on it. I write this down just to see if they're cheating me or not. Well, they obviously are not. It's just the prices. So remember when we were talking about the median price? You never know which price they're going to give you. But the one thing is for sure, the only price you'll always be able to fill in at, or your chances of filling in, is going to be in the middle or closer to the more expensive, because everybody wants to sell you something for more expensive. Nobody wants to sell you something for too cheap. It works the other way when they're buying. But how do you get filled in and not waste your time? Find a median number, and that's what this is for here. Okay? Option structure links, so I can keep on updating my numbers manually. These are not automated. I want to enter these myself because sometimes I have to go through these calculations. If I were to just pull this off of the internet, my numbers would be all over the place. I would never be able to properly evaluate what's going on with my stocks. So yeah, so far 8% on this trade. Very happy. Thank you very much once again, and we'll see you on the next one.